So these are the currencies. Taking a while to pop up. These are the currencies that are involved. So you will have Tether. Okay guys, let's do this one more time. Try to do it a bit quicker this time. These are available on TradingView. You can find them. These are the currencies that are involved. So Tether should be the biggest. Dollar next. You will have Euro and Pound. You will have Yen, and you will have Korean Won. Korean Won, an interesting one. For those of you that follow what I'm doing in FX, a very, very interesting one. While we're waiting for this indicator, yeah, she comes, finally. So which one is which? Well, I'll show you right here and you can see it for yourself. Tether is the biggest. It is the biggest. So if I take all the others off, I take them off. Whoops, let's put Tether back on, Japanese, and you can see it. So it's unsurprising. Most people have stayed by crypto, which supports the recent last day. So the last day where you had the real spill. So the institutions were beginning the short on the down part of the shoulder here. They were early. They were beginning the short. The professional and retail traders were in the panic sell. So they go into Tether because they aren't leaving crypto entirely. They first go into Tether. How's USD volume compared to Tether? That's that blue chart there that is hidden somewhat by the opaqueness. And if I take the Tether away and make it really just ghosty, you can see that the dollar is the next biggest currency that is involved there. So there have been some people, maybe if you're on Bitfinex, you trade straight into the dollar. The others are largely Tether. Okay, what about the euro? Is it significant? If you saw that, you probably realize it's not significant at all. If I take the dollar off, that is the euro. The biggest point for the euro was around here in the plunge of the bear market. And then a little bit, let's move this box arrow around. Let's close it. A little bit here, nibbling somewhat over here, but a significantly smaller segment than the dollar. So many people in Euroland will also probably be trading in the dollar or are not engaged particularly in the euro. So we take the euro away. Let's cover the pound. Can you see anything on the chart when I do that? If I take the Tether away, you can, because it rescales. But if I put it on, it's that small, and I'm going to again ghost it away. You can own it. It's insignificant relative to the Tether. So the GBP, not significant in terms of its engagement in crypto. What about the yen? The yen, more like the euro, bigger involvement in the bull market and then the tail of bear. Got kind of really low here and then a little bump recently. Again, Tether is huge. Let's not use such a vicious benchmark. That's the yen. Let's use it compared to the dollar. It reframes each time. You can see even the yen versus the dollar, not a particularly big one. We can move this box around as well so that you can see how engaging they were along the low. So this is quite a useful indicator. I'll leave the dollar on. I'm going to take the yen off. Korean Won. Korean Won, you'll notice, is actually quite a bit higher than Tether. So remember about the Bitcoin Korean Won trade that I've threatened you with. So when Bitcoin finally goes for a moon on the Korean Won trouble, and believe you me, I don't think the Korean Won trouble is that far away. They've banned short selling. They do calls in their markets to earn 5%. They underwrite calls. It's called the callable. There's a Zero Hedge article on it. Go look for that. Maybe we'll include that in the link below for you to watch. Big involvement of Korean Won just here, just prior to the collapse. We don't know if they were buying or whether they were selling. Also big involvement in the bull market period, and then a little bump over here, yet to come back in a big way. So that was just a quick currency run. Most of it Tether and then the dollar. But one was very key at certain key moments, just around the spiller that we called for on the short side. Okay, so a couple of things that we've done there. So let's have a look at where we are right now, because it could be about to get interesting for you. If there's to be a certain degree of recovery over the weekend, you could be looking at it right now. You could be looking at it right now. It's kind of broken out of a falling wedge at the moment. So big snapback because it's kind of capitulation sold to make the 4K. Big snapback, but thereafter it grinded. You'll learn about grind lines if you come and do a program, but you could see it grinded, and that kind of gives you a rising wedge. That's your sell-off again. So you have your capitulation, you have a snapback with some violence for a degree. In comparison of the fall, we're talking small beer. We're on the 30-minute now. But you are getting a squeezing. You are getting a squeezing, lovely people, that is coming like this. And you have to decide, is this going to be a continuation to the downside, or is it going to be something to the upside? And I actually biasing to a small amount of recovery into Sunday. Whether that lasts, whether you then later have a sell-off, who knows? But overall, the upside nice and perky, obviously very perky there, and then slightly grindy there. Initially strong snapback here, but not nearly as strong now on the down leg, and then very low volatility, little bump up, and again kind of like wedges on the fall here. So a little bit grinding, marginally lower lows, potential for an upside move for us, and that could take you to north of 6,600. North to 6,600, that'll be welcome. Don't count on it lasting forever. You could get a nasty slap on the face. This could take a while. Remember that 3 months of bottoming. This is an extremity. It's further than I thought as my priority, my main bias was suggesting. But it has actually brought the time frame back in. The clues were the violence in which it fell to the downside. And it actually was coming down quicker than the up leg. We saw this up leg, and then it started to come really fast down. That was surprising. Then it had the little rise. We thought, okay, maybe it's done doing that. Then the spiller from Manila, wow, that break and the triggering of the neckline was bearish. But that momentum, it shows the fear of the participants. And I'm afraid professional traders and speculators are part of it. The institutions actually were selling earlier. Professional and retail traders, because they leveraged in other markets and getting killed. They're hunting for cash. And this is something else I wanted to tie. So what about the guys that say it's correlated to the SPY, the S&P and all of that? Because the S&P dumped and Bitcoin dumped, basically. That's the extent of the data, and that there have been 1 or 2 other moments where that's happened. So this is where the charting can help you. This is the S&P. I've added it. And I'm going to get rid of the bull a little bit because it's so extreme, it spoils the SPY line, just looks flat. So everybody says they correlated because the SPY dumped and the Bitcoin dumped. No, the same people in the one market are crapping the bed in both places. Simple as that. And they're running out of money. In actual fact, you were topping out over here and going down. Over here on the S&P, you were going up. Plenty of reason. People always see the aspects that support their case. They don't see the aspects that spoil their case. Up, Bitcoin, down, up, down, largely, and still down. So from that low over there, you were up and down. Absolutely not what was going there. Someone will say, oh, but they were doing the repo and therefore the market went up because all the repo money went into there, not into Bitcoin. It doesn't matter what your story you create. It isn't correlated. The same amount of repo money, a similar proportional percentage should have gone into Bitcoin. If they correlated, it didn't. Okay, so it's not correlated. You've had periods here where the market is going up. The S&P is going up. During this period, Bitcoin down. Okay, it's not. The one you should be watching is the fear. Gold always goes down first before it goes up. It's the fear that sells everything off. It's the cure that pumps the anti-fiats. So let me say that again. It's the fear that sells everything off in the name of cash. It's the fear that sells everything off in the name of cash. However, the solution they will come to, the problem reaction solution that they'll start to introduce, will be proliferation of money, and it will be very, very good for gold and silver, and it'll take a while to recover on the equity markets. Why? Leverage burnt hands, people still closing out, forced sales, etc., etc. So if you remember the 2009 lows of the stock market, it took ages before it started to build momentum, and some of that money started finding its way back into the market. So this was something we were watching at the same time, and was actually a telltale sign. Silver, silver, silver. So let me take it into, was it 30 minutes? This is structure that we had on silver. You had an amazing, on our Scandinavian capital markets, you can get 100:1 leverage. You can get around the European aspects. I am trading them. I am using them. I made some big money, not in this particular trade, but earlier actually shorting silver. Ashamed to say, not really. I'm buying and I'm an investor. But you had inverted HVF structure, you had a continuation pattern, and you smashed your target. You had a rising wedge back to your target up to here, and then you spilled further. This was in overperformance spiller heaven. And to Peter Schiff, that wants to gloat that Bitcoin is so far down and it's a laugh and it's a joke, it's a high beta version of one of your high beta precious metals, Peter. You know, if you want to be the least ugly girl at the dance and brag about that fact, you're admitting to being ugly. This is the season for ugliness for the anti-fiats, because it's fear. It's insurance policies. People had some money in there. There's your squeeze. There was your first impulse. If I draw it quickly, let's do it in purple. There was your first, there was your second, and there was your third. And then you were down, down, down. You broke. You had a slight attempt at a return move, down, down, down. You performed to target, and then you overperformed. You jiggity, squeezy Japanesey, spill, and you took a tumble after a rumble in the jungle, and down you go. So that's the whole game, and it could still overperform further, and is shown less actually penchant to recover than actually Bitcoin. So it's a question of gold is relatively stable compared to silver, which is relatively stable compared to Bitcoin. They are just higher beta versions of each other for now in the anti-fiat world. In the upside game, not only will Bitcoin do percentage-wise likely greater gains, but I want to be in both. And I'm glad to have both, and I intend to accumulate further amounts of both, because the cure is coming. And the cure will be the driver for physical precious metals and potentially cryptos. And in actual fact, Bitcoin is almost relatively stable compared to what certain alts will do. And we will have a small collection and number of alts that will do it. On that point, it's worth reminding people that I've always said the alts never made a bull market and could make a W bottom. So on total 2, I've said you've never made a bull market on alts. I disagree that you, with the likes of other people that say Bitcoin never made a bull. It made 61.8% of the previous high. This is the blood basement. This is where Saw the movie is made. Heads are chopped off here. It's ugly. You want to stay out of there. It's a scary story. It's bad energy. The total 2, since dipping there and then dipping again there, look at these levels I've drawn, key levels in and around the 120 billion mark. You've not been able to get up. You came up there once, you came up there a second time, you've been repelled, and this, by the way, literally was marginally higher. If you look at the low, 36.86 market cap without billion. Without Bitcoin. I'm talking in billions without Bitcoin. How's that? 36.86. Have another vodka, Francis. 36.86, 36.75. You literally kissed. You talk about key levels of significance being kissed. I showed you the 4K level on Bitcoin. That was the key bottom. It was the lid on the rounding out bottom of Bitcoin. Now you're seeing the W floor that has given us on the alts the following draw. You actually have, it's got to do it in another color to red because we're in the basement. You had your sell-off, you had your rally, you had another sell-off, you had your rally, and you had a violent sell-off. And it's literally for now held that low. Wow. It needs Bitcoin to recover to stay, and I think there's a chance alts, which can be weaker, could still trade lower than this bear market low. They could still, if we get more fear, and crypto hasn't started to catch a bid. Now, when will crypto catch a bid? when will crypto be seeing the alternative? When will people start switching and saying, hang on, this is cheap, and the cure is going to drive the anti-fiats up? And this is where gold and silver helps you. This is where gold and silver helps you guys. And I know you don't want to talk about it. This is 360-degree analysis. The same people that buy insurance against proliferation of fiat will be both investing in gold and silver and Bitcoin. I know that because I'm that. And other people I know too are buying a bit of both. You don't have to only back one horse when you can back two. You know, you put a bit of money on them all. So let's talk about that. Let's talk about that. So when does gold and silver turn? Because it will also highlight the beginning of people starting to think about the concern for the cure rather than just selling for cash in fear. Once we get out of that, and there's a lot more bad news to come. There's a lot more horse manure to be shoveled that they'll having you try eat, and it will come. But how at some point people are going to say, you know what, this 1.5 trillion the US just found, printed up, taxed everybody. Will they tax everyone to bail out fracking in this Greta communism world? Who knows? But it's going to start having an effect, and the metals will start to turn. So let's talk about that. Could the metals give you some guidance for when crypto seriously has a turnaround turn? So here we're going. Here we're going, and where am I taking you? I'm taking you to silver and gold. The anti-fiat. How has the biggest anti-fiat performed prior to Bitcoin's existence? Well, we had a major shooting star at the October of 08 in the gold silver. But first, it pumped out of a squeezy Japanesey. Yep, they're at it again. It pumped in a major way and got worse first. That was silver falling faster than gold, and gold falling too, but not as a lower beta, slightly less volatility and less bearish in comparison to silver. And you got that shooting star. So when is the next shooting star? Rising wedgie. Look what happened, by the way, as we draw this. Look what happened. You had a squeezy Japanese on top of the rising wedge. Spiller from Manila on terms of that took you into virtually $50, not quite, silver, and $1,927 gold. From 689, guys. So that was more than a 3x on gold. You could have had silver at sub, I think it was in around 8, 12. I'd have to check exactly, don't quote me. Up to 49 and a few cents. So that is what happens when you go from there to there. And that was in and around 92 and a bit, not even 92, 88, 89 value. So those of you that think 08 is the biggest crisis you're going to see, I'm here to tell you, if this goes to 89 down to just below 32, let's call it 30. If that's your spiller and you're in Manila, let me tell you, this is going to be a tumble. And you know, that's a proper rumble in the jungle coming your way, because this is at and crossed 105. I don't know historically if it's ever been that high. I don't have sufficient data on any of the trading view, and I've searched the web. I've asked certain historians of precious metals to tell me if it's ever taken 105 ounces to buy a single ounce of gold. So that inverted silver, that would have signaled that you should be out of crypto and short on crypto, and trading short with targets and over performance bands, and you'll learn about that in a course below. Get on and make a call if you're ready to protect your investments in these reset times. Do it. Otherwise, if you're not, don't. Remember, trading or even actively managing your investments are only for people that take responsibility for their investment decisions. No one knows. They just have probability-based mechanisms to protect you with. So I'm suggesting we ran the 100. We've run the 105. We could get to a point here, beautiful people, where in actual fact we are at an all-time high. Maybe we split up to 108, 112, 120. And it's never been that high. Perfect. The higher the climb, the harder the fall. In other words, for every amount that we go higher than 89, I'm calling lower than 30. In fact, it was roughly 30.8. So 30.8. I'm saying we go 20s, possibly 15s on the downside. In other words, the Fed has introduced volatility. Central banking cartel, with their proliferation of fiat, that is taxing you every time they bail out a pet industry like their banker friends, like fracking industry if they decide to do it. In fact, I've explained that it's already a bailout. It was a sub-economic activity that should never have been given bank funding in the first place, and that it was quantitative easing already to an industry. But never mind all of that. When they do that, all they do is kill your money and tax you. They tax you every time they do it. And they've not stopped doing it, just the scale has got bigger as they've created a bigger debt experiment, and that just means it introduces ever higher volatility. And the fact that you've now got to this extremity of the gold-silver ratio says at some point this one turns. And we actually talk about rising wedges. We call it the type 2, where you pop out the top of a rising wedge or you fall out the bottom of a falling wedge before you go the other way, and then you go truly violently. In other words, it's like a final capitulation on the downside, or it's a final blow off on the upside, which then gives the rise to the most vicious down leg, and it'll come suddenly, folks. I can't tell you how high this goes. It might turn into a shooting star right here and wick down to here, or it might go up even higher still. But it's probably in new territory, and when that goes, it goes hard and hard the other way. So silver is something to watch with Bitcoin. Peter Schiff is wrong. When his stuff starts to recover, so will Bitcoin, in my opinion. Look, Bitcoin could go to naught. Maybe they come out with, the IMF come out with some hash graph solution or whatever the case may be. I don't think we're ready for it yet. It's been around for a while. There's also a trust element to crypto. Blockchain is not green in any way. In time, they could attack all of these things. Don't get bought into a belief system. Bear in mind that to a degree, but I assess that it certainly has enough short-term time to respond in the same way silver and gold with, only with a higher beta. So if we go from 105 down to somewhere in the 20s or 15s, let me tell you the gold move will run into many multiples of thousands, and silver could quite potentially pass into 103 digits and beyond as a result of that. But your dollar will be such a diminished dollar. We're talking about, I expect, tens and possibly hundreds of trillions that will be globally made available as part of UBI, bailing cars out, industries, this industry, that industry, everyone. It's going to be like that Oprah show. You have a trillion, you have a trillion, you have a trillion, all tax on you. And it'll look like Santa Claus, and it's just more devaluation. So that's where we are. That's why you should actually worry about precious metals. If they have downside setups, as I illustrated, it's probably bearish for Bitcoin. So you've waited a long time for me to talk on crypto. You saw the total too. You saw that that still could be in a bear market and may not have bottomed. It can fall in the period while Bitcoin bases and regains its loins. If it's continually weak, you're going to have continual stabs of fear. You could go lower there. If Bitcoin were to run 3.2, the macro scenario is over, that final low. I still assess there's a chance that it stays above that, but there's more fear to come. However, at some point during that fear, the solution will already start to be showing the ball. There's not stage 1, stage 2. They parallel run. They'll start talking about what they're going to do. They've already brought out 1.5 trillion. People are going to start looking at what's happening next. Most remember what happened with gold. I expect gold, as it has done before, and silver to be the anti-fiat, and it is in upside HVFs, by the way, in all currencies. And I'm waiting for them to resume, and they will resume, and they will resume with gusto and overperformance. And when that is happening, I expect it to be exceedingly good for crypto, but it might start a little bit before in crypto, it might start a little bit after. And we got to see if we stay above the 3.2 until then. and where you will see that using alerts, guys, on your gold and silver ratio in a different planet, in a different world, watching your mining indices in a different planet, in a different world. You can be one of the first. We do 360-degree analysis. We understand markets where other people haven't. We are saying to you that the silver inverted was the signal that there was nasty overperformance selling coming for Bitcoin, and if you were aware of it, you could have traded it. We were very focused elsewhere, trading the emerging FX, so we're not claiming that trade, but the opportunity is there, and now we're back on watching. We're back on watching, but there's a lot of balls in the air and a lot of watching to do, and you can be part of our community if you like this clip. Okay, it's a lengthy one. Enjoy your weekend. Thank you for watching. I'm Francis Hunt, the crypto sniper and the market sniper, and we will see you on the other side. Keep an eye here for what will happen in your crypto. An anti-fiat barometer is living right under your nose. And no, they're not the same thing. They're entirely different, but they have the same response. When people buy insurance policies from fiat, they go to gold, silver, and Bitcoin. Okay, on that good note, I'll sign off, and I wish you all well.